Now we have Jason Wiener.
Hey, good morning, everyone. My name is Jason. I don't come from the world of DAO. I come from the world of cooperatives, shared and distributed ownership from a corporate and legal context. I'm a trained lawyer, and I run a boutique law firm in Colorado and around the country focused on the incorporation of cooperatives, and we do a range of work on designing, incorporating, financing, and advising cooperatively owned entities. In my work with technology, there's still this kind of closing chasm of the world of unincorporated distributed platforms and incorporated platforms that are known as cooperatives. How many of you are members in a cooperative, understand or have delved into what a cooperative is or involves? All right, a handful of folks, great. Cooperatives, unlike unincorporated entities, are creatures of the law and come with certain formalities and certain relationships that are defined by law between shareholders or members and the legal entity. The cooperative is a separate legal entity from its members. It has its own rights and responsibilities, its own legal status under the law, for better or for worse. Cooperatives, like corporations, have First Amendment rights, don't necessarily have, anyway, won't take the analogy terribly much further. Cooperation is at the root of the business model, and in many respects, cooperatives are the original form of a distributed autonomous platform. They've been around for centuries. They were used in just about every era of extreme economic disruption and transformation to reorganize the means of production and the arrangement of value creation, and were first used in native traditions and have made their way through Western European traditions into a more mainstream, mainstream view here in North America. They're rooted in their practice in autonomous and distributed decision-making, unlike the linear extractive process of corporate governance, where investors contribute capital, their shares or their dollars vote to elect a board. The board then hires the people with power who make 300 times what the average worker earns. CEO reports back to that board, and ultimately, at the end of the day, the output of the corporate form is to generate profit for shareholders. And it's an extractive loop that has developed a system of accounting that treats workers as losses on a P&L. It treats the loss of talent as a liability on a balance sheet. The cooperative, on the other hand, has created and codifies a virtuous cycle of contribution. Rather than shareholders capitalizing a corporation to extract profit, you have value creators, generally workers, but could be tenants in a house or in a home, or producers in a marketplace, or consumers in a marketplace, and they pool their contributive potential, either their consumption or their production, and create a platform for creation and marketing that then regenerates wealth and value back to the people who created the value in the first place. It's designed to at all times be regenerative and to be distributed, and every co-op that follows the law has a board that is either elected by its members or is beholden and serves its membership. There's this inherent feedback loop of accountability and responsiveness, and that's what makes it that's what allows cooperatives to operate on an autonomous basis. You might be surprised to know that cooperatives are generally treated by the law as autonomous organizations. In many respects, they're exempt from overbearing regulation. securities regulation, in some cases tax, in other cases other matters of corporate governance, anything that has come out of economic recessions that force new regulation on traditional corporations, largely cooperatives are exempt. The credit union apparatus, the credit union system is also exempt from traditional banking regulation, much to the chagrin of banks, and it's largely because these are legally circular, accountable organizations. I focused on worker producers because I think that we need to have a serious conversation in our society around the human value creator, not just as a worker, not just as a peer-to-peer producer, but as the holders of the means of production in our economy, and the need to have a conversation around reorganizing the corporate form to put the worker producers into the center, into focus. Cooperatives, again, nest the control and decision-making in the producer. When that's a worker, that's a really powerful thing. I was a worker owner for a technology, a hardware technology, a solar company for 5.5 years, and it was powerful to see what it feels like and what it means to give responsibility and information to workers. And it's no surprise then that cooperatives benefit from greater buy-in, greater level of engagement, and you see that in data that shows much greater profitability rates, longevity rates, lower turnover rates. They really are truly the people-powered business model that's been around forever. Yes? Co-ops can be formed with stock or with membership. The statutes here in Colorado allow both. It can look like a membership interest in an LLC. It's a little bit of a hybrid. On the membership side, it's less structured and formal. It doesn't require a share to be issued. A membership is a fairly loose term that just correlates to or is kind of a proxy for a set of rights and obligations and responsibilities. It can look a little bit like an LLC membership interest or a nonprofit membership interest, and those are usually defined in the bylaws of the cooperative. But they're enshrined and they're legally protected and legally enforceable. On the other side, particularly when cooperatives are raising money, we tend to use stock structures because investors still appreciate capital stock and like to see quantitative representation of ownership, for better or worse. But we can do both in the cooperative structure. Not to raise money from outside investors, cooperatives generally, with some disclaimers and caveats, are exempted from raising capital from their members. So if a worker cooperative, let's say it's a small tech agency and their workers each contribute $5,000 or $10,000 to capitalize the cooperative, that's their membership buy-in, that contribution of capital is generally exempt, meaning there's very little documentation that's required, there's very little legal oversight, and there's no filing necessary with a securities regulator, which is a pretty serious advantage for either a startup or a relatively small entity. When you raise capital from outsiders, you still are following traditional securities regulations. Cooperatives are both, in my view, the original people-powered business model, the original social enterprise structure. They're also, in many ways, I call them the kind of Apple product of business models because they're intuitively centered on people. And they've been drafted into the law based on these principles. And the principles of cooperation are, in almost every jurisdiction, embedded in statute. There's very few other places in the law where you see normative statements of human values written into the law that govern an autonomous legal entity. No LLC statute I've ever read says this shall be operated in an ethical way. We have regulation for that. Or we rely on people to engage in good faith with one another. Or corporations, we rely on them not to defraud their investors. We have regulations to enforce that. We have contracts to enforce that. These principles are embedded in the cooperative model. They're embedded and they're almost always incorporated into the legal structure. And these have been interpreted over decades. These have been revisited. There's now an active conversation to re-engage a discussion around diversity, equity, and inclusion in the cooperative sector. There are now more than 400 worker-owned cooperatives in the United States with several thousand worker owners. And this is a bright spot that can be leading the way and is leading the way in levelizing and reversing the dangerous trends of wealth and income inequality, not just at a superficial level, but rooted in legal ownership. So we in Colorado are part of a very small club of states that have a newfangled law called the Limited Cooperative Association. It's a flexible form of a cooperative that requires even less of the corporate formality, and it allows for free association of members with all the traditional guardrails of cooperative ownership, but with much greater flexibility about how the cooperative is assembled, with different classes of ownership that allow for investors even to have minority voting rights. By minority, I mean less than a controlling interest, which is powerful when a co-op needs to raise capital to scale. And a decade ago, lawyers and academics saw the limits of the traditional cooperative form and thought, well, the cooperative's never really going to get into the mainstream unless it can access traditional capital. And so this statute was drafted and was initially adopted by about 8 states in 2010 and 11. Colorado was one of the first. And it's now seeing a resurgence with 2 or 3 states adopting the form in the last 2 years alone. It's, in our view as a firm, the cooperative model for the next century. And it's a platform for many of the startup cooperatives that are organizing around the country to form in a state with that statute. Many folks use traditional LLCs when they form a startup because it's easy, it's based in contract, and it's fairly flexible and will protect the agreement and arrangement entered into by members. The LCA is very similar. It all but says you're free to do what you want as long as you agree to it in your bylaws or operating agreement, except that the LCA says, but you've got to abide by these core cooperative models and structural guardrails to prevent the co-option of a cooperative by investors or the dilution of member control by investors. And those are built into the statute. They're immutable. They can't be evaded by contract. So it's a really powerful anchor with a whole lot of flexibility. Again, it's human-centered. It embeds flexible financing. And we think it offers the potential of significant scale and flexibility. There's also a topic for another day, but there's some really favorable tax treatment for cooperatives using this model or other cooperative models under the tax code. A little bit about history. Again, I said this is more than a 400-year-old tradition. It's based on tradition. It's based on principles of human organizing, not just legal incorporation. As you may know, the traditional corporate form is the creature of capital. It was formed to protect the investors in trading companies that were doing business in far-off lands and allowed for the joint capitalization of a common enterprise with limited liability. But it was never designed to protect and put people forward. It was meant to protect shares and the way that dollars would vote and control separate legal existence. This tradition was born out of economic distress and economic exploitation. At every step of the way, from weavers to industrial workers to disenfranchised and marginalized workers in northeastern Spain, the cooperative model, the tradition, was born to empower people who had the capacity to produce for themselves and for the greater economy. We're seeing that next transformation today with data, with technology. We're seeing the next era of economic disruption, and we'd be remiss not to consider the tradition of cooperation and people-centered organization in this next iteration of our economy. So cooperatives organize themselves in all different sectors. These are just a few of our favorites. ColoradoCooperative is an independent technology agency that works with nonprofits, not NGOs, cooperatives across the globe, and they have a really interesting and inspiring values-based engagement process with their clients of ours. Democracy Brewing is in a highly corporatized, rapidly consolidating craft beer sector. Democracy Brewing formed about 3.5, 4 years ago, actually by now it's been 5 or 6, as a worker-owned craft brewery in downtown Boston, where rents are growing as fast as they are here in Denver, and they have a prime location for worker-owned craft beer. And they're reigniting a tradition of democracy and civic engagement using their cooperative as the platform. They've raised money from their community in a direct public offering. It is a cooperative that's been able to access non-traditional investment from ordinary people in their community, and they've raised enough money to start and to grow, and they're successful and inspiring. Savvy Cooperative is interesting. They've created and are creating a brand new marketplace where it doesn't currently exist. It's a patient experience and data cooperative. Big pharmaceutical companies will engage in clinical trials and focus groups on either new marketing campaigns or new drugs, or to gain insights for their innovation. And they do it in an extractive way and in a highly individualized, fragmented market. There's currently no economic transaction for most people who participate in those. So Savvy came together to say, we collectively, as patients and people with medical insights about our conditions, have tremendous power that's not currently being protected or tapped. So they formed a cooperative to say, let's aggregate the power of our collective insights and our collective experiences to negotiate volume contracts with big pharmaceutical companies that will actually pay significant money for us to organize a platform to deliver insights to you. And so they're generating, on a bootstrap basis, hundreds of thousands of dollars in contracts with pharmaceutical companies all over the world to deliver insights in a people-centered, in a patient-centered way. And they founded it as a cooperative. They will be a cooperative. And their founder has done tons of press and videos. It's really inspiring to see. But the business model of cooperation is core to what they're doing, because there's no mechanism, there's no potential for extraction. The co-op can't monetize their data without that being made known to their members. It's a fundamentally member-centric model. It says, we will create a marketplace for, of, and by ourselves, and we'll monetize it for our benefit. That economic relationship can't be inverted to subvert the patient, to subvert the member. Cooperatives are rooted in self-help. They're rooted in empowerment and investing in community. That's born from the principles I discussed. At a community level, they bring capital together from their members. That's the way cooperatives generally start. They form from a premise of common need and common contribution. That doesn't have to mean affluent, privileged people coming together to solve needs for other people. It means people coming together to solve their own needs. This is an incredibly empowering business model for people without privilege and without financial means. They strengthen historically marginalized communities by rooting power where it otherwise both doesn't exist and has been deprived for centuries. When it comes to wealth, cooperatives are much better at distributing wealth and distributing income. They are vehicles for income distribution. They're also vehicles for empowerment through financial training, through management training, and they're far more resilient in downturns. When I was a worker owner, we went through a significant disruption in our sector, and we had serious discussions around slashing all of our salaries so that we could avoid any layoffs. I just can't imagine a traditional environment in which that kind of discussion can take place or be put into practice. And the data bears this out. The business model is about aligning incentives. It's about creating, on the one hand, we tell in more conservative and financially driven circles, we talk about cooperatives as being the engine of creating lots of mini capitalists. But in circles like this, it's really about talking about self-empowerment and autonomy by giving people the means of creating value and deriving benefit from the value they create. And we have to find new ways of protecting the risk and reward that founders put in when they form cooperatives. Not all cooperatives are created as highly distributed new entities. Some of them are created by a couple of people coming together to form a platform that will eventually be populated by lots of founders. And that creates some interesting tension around founder dynamics and founder incentives. And I believe the business model is currently living up to its potential to address some of those tensions. And that's the end of my talk. I think I met my time.